Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner, who is on a bit of a roll at the moment, and we'll get to that ultimately. Garth, nice to have you in studio.
Thanks, Julieta.
We're going to start off with the pairs trades, which yes, has proven fruitful, shall we say, although maybe not to the extent that one would have wanted. But let's start there and see what you've done with that particular trade.
Yes, this is the pairs trade that we did around about a month ago now on Pioneer Foods and Zeder. And I'll go back and look at why we did the trade, how we constructed this thing and what have you, because I know pairs trades often are a little bit confusing to get your head around. And essentially what it is a pairs trade involves a long and a simultaneous short of two different stocks that are related to one another, and you do the two legs of the trade in equal nominal value. So let's have a quick look at it. What's on the screen at the moment is a chart of Zeder and Pioneer Foods, and the two share prices overlaid against one another. So the scale on the right-hand side actually is the share price of Zeder, and the scale on the left-hand side is the share price of Pioneer Foods. The one in white is Zeder, and the line in yellow is Pioneer Foods. Now you can see that the two share prices do track each other quite closely, and you would expect that to be the case, because Zeder is an investment holding company which holds assets in the food processing business. Their biggest asset by far and away is their holding in Pioneer Foods, which makes up around about 72% of the value of Zeder. So it's therefore only logical to think that the two share prices should track each other quite closely. But nevertheless, you do notice, if you look at this, that there are times where the share price graphs actually deviate from one another. And we've seen this quite a few times. I mean, this is only looking back over about 6 or 7 months, and you can see quite a few deviations. But this seems to happen quite frequently between the two share prices. And what we had identified was this opening up of that gap in early March over there, where the share price of Zeder looked relatively cheap on a comparative basis relative to the price of Pioneer Foods. And what you do in a situation like that is you then buy Zeder and sell Pioneer Foods short in order to try and take advantage of that gap normalizing and coming back together again. And you can actually look now what's happened over the last day or so is the two share prices have come back together, as we expected was going to be the case. And that's how we've made a profit out of this trade. So if we look at it another way, if we actually now plot a relative graph of Pioneer Foods over Zeder, to do this, you take the share price of Pioneer Foods and you divide it by the corresponding historical share prices of Zeder, and you plot that graph as a line graph. And you can see it just looks like a series of up and down squiggles. But what that is telling you is that the relationship between these two share prices typically oscillates between these boundaries. So we've got it at the bottom 18.5 and at the top 22.3. Now that's a fairly broad band. That's around about 15% or so that the share prices actually oscillate against one another. And when it gets up to the top, like it did here recently, that actually is an opportunity to then sell Pioneer Foods short and buy Zeder, because it's telling you that Pioneer is overvalued relative to Zeder. And conversely, when it gets to the bottom of the graph, you can then buy Pioneer Foods and sell Zeder short. So what we did recently, when the share price, then this relative graph popped up to the top here, we did a pairs trade where we went short of Pioneer Foods and we went long of Zeder, and we did each leg of the trade in 100,000 Rand nominal value each. And what that meant is that we shorted 592 CFDs of Pioneer Foods, and we bought 13,262 CFDs of Zeder. All right, and that meant that the relationship or the ratio between the two shares at that stage was 22.39. And we were then looking for that ratio to come down in order to unwind this pairs trade and take advantage of the profit.
Closer to the 18.5 times ratio.
Yeah, I was more looking for it to go into the middle of that band. If you actually look, I mean, if we go back to that slide, you can see that, yes, it does obviously overshoot towards the bottom end of that at some stage, but we might wait a very long time for it to get to the bottom extreme. So I was looking for it to trade back down into the middle here somewhere, and just to use that as an opportunity to take advantage and to take profits on this trade.
Because I was going to ask, were you disappointed that you exited the trade in sort of the midpoint of that range, or was that always the plan?
That was always the plan, although looking at it, what's happened a day later is I could have made more money on this trade. But anyway, I mean, that happens in trading. You're never going to get the exact top and bottom. So that's how we executed the trade. Now, what's happened subsequently? Well, we closed it out. I did this yesterday. I bought back the Pioneer Foods short at 179 Rand, and that meant we made a loss there of almost 6,500 Rand on that leg of the trade. And then we sold the Zeder long position at 8.34 Rand, which meant that we made a profit there of 10,145 Rand. Now, remember, I did say on previous shows that we weren't expecting to make money on both legs of these trades. That very seldom ever happens with a pairs trade. What you're looking to do is to try and take advantage of that relationship moving in a particular direction. And it was always likely that we would lose money on one leg of the trade, but as long as we made more on the other leg of the trade, then we consider the whole trade to be a success. And that's what's happened here. So we've actually taken a profit here of 3,692 Rand when you take the two legs of this trade together.
Yeah.
So we've made money. It's not a lot of money. It adds about 1.5% to the value of our portfolio, which is fine. It adds up. And,
yes, it does.
And I consider this a successful trade.
Yeah, well, it's better than a slap in the face with a wet fish, certainly, almost 4,000 Rand in profits. Yeah. Okay, so you feel that it worked out as you would have wanted it to?
Yes, it worked out as I would have wanted. I think there was a little bit more money to be made here, and there still might be more money to be made had we held on. But, you know, we've held it for about a month. It's kind of getting a bit long in the tooth. The margin requirement that we needed to put up for this trade was fairly high. Mainly because Zeder, but in fact both Pioneer and Zeder are a little bit illiquid at times, and therefore the CFD margin requirement on those shares is higher than it typically would be on a very liquid share.
Yes.
So it's been eating up quite a lot of capital, and it's also been eating up a bit of my focus. So I thought, you know what, a month is quite a while to hold a trade on this show. Let's get out, let's take the profit that's there, and let's move on to something else.
Okay. Well, that something else happens to be Aspen, and it's a share that you flagged last week as one that you would be watching after the GlaxoSmithKline sell-off of their stake in Aspen. So tell us why you have now decided to enter a trade there.
Yes, that's it. So we did allude to the fact that we'd probably do this trade on last week's show. And in fact, I did it straight after we recorded last week's show. I went out and did the trade. If you look at the long-term graph of Aspen there, that goes back to 2011, just to put this into context. You can see that there's a very well-defined upward trend that has joined all the low points on that graph since 2011. And recently, we've pulled back towards that support level on that long-term uptrend, which is at 370 Rand. There's also an area of lateral support over there, which joins that recent low point, which is in about November last year, also at 370. And also, incidentally, your 200-day moving average comes in just a little bit below these levels, which also tends to add an area of support as well. So multiple support levels to watch for. And if I zoom in on that area, that's sort of the last 6 months of trade or so. Let's do that and have a closer look and see what's happened since then. So there we go. You can see that long-term uptrend that I spoke about coming in at about 370. It combines with that lateral support level also at 370 Rand. Now, you alluded to this placement of shares that GlaxoSmithKline sold. Now, let's just talk about that for a moment. What happened there was GlaxoSmithKline obviously is a large shareholder in Aspen. Yeah. They owned 12% of the company, and they made an announcement that they wanted to reduce that stake by half. That meant that they were effectively selling 6% of the company. They did that via what they refer to as an accelerated book build. So GlaxoSmithKline goes to a bunch of investment banks and say, right, guys, we've got all these shares we want to sell. You go out and take advantage of your network of pension funds and hedge funds and whatever else. Find us buyers for the stock. And it was 11 billion rands worth of shares, so not small change at all. That placement of shares happened overnight. So the announcement came out after the market closed. I think it was on the 12th of March.
Yeah, it was a Thursday.
It was a Thursday. Before the JSE even opened the next morning, that Friday, the shares had been placed. So it tells you that there's very, very healthy institutional appetite for Aspen at lower levels. Those shares were placed at 372 Rand. Now, bear in mind that the price of Aspen before that was around about 400 Rand. So you're talking about a reasonable discount. It was probably about an 8% discount or something like that to what the prevailing market price was at the time. But it's telling you that there was a hell of a lot of appetite. Now, the thinking goes that if that 372 Rand price was good enough for 11 billion rands worth of shares to be taken up by the institutions, then chances are that's a good enough price for anybody else to be buying it as well. And what usually happens is that price level tends to act as a sort of a support. And you can see it, and just coincidence, I suppose, that that support area also is technical support, as well as the fact that that was the level where the book build was done. But that big volume spike over there represents those shares that were sold by GlaxoSmithKline and placed into the market. Now, what have we done from here? Well, we did see a nice reversal up off that support level. In fact, it happened last week, Tuesday, when we were recording this show.
Sort of the 3-day rule, or thereabouts, 4-day rule.
Well, in this case, it took longer, actually, because we tested that support only about 10 days or 2 weeks later.
Yes.
So, nevertheless, the fact remains that we saw it trade down to 370. It actually traded down to 364 Rand. And then it reversed up very powerfully that afternoon. And I used that reversal as a signal to indicate that the buyers had now taken control of the share price. It had been down to that book build price and below, and now we've seen the buyers really coming and stepping up and taking in control of the situation. So I went long at 376 Rand, and using a stop loss now of 359. It's quite far out the way, and that's really just to put it. Yeah, I just don't want to get stopped out unnecessarily. Yeah,
because I mean that's I suppose it's slightly looser than normal stop loss that you've got there, Garth.
Yes, it is slightly looser than normal. I guess I'm just being aware that there could still be some noise around this 370 area, and I don't want to get too caught up in that. I don't want to be stopped out by any unnecessary volatility. Okay. So putting that stop loss a little bit further away gives me some comfort in that respect.
Okay.
And I'm looking for the price to rally back up to about 420 Rand here. So, it might take a few weeks or even a month or more, but I'm relatively confident that we should see this price bouncing back up towards that sort of area.
Okay. So in greater detail, then, let's have a look at that sort of trade.
So I've gone long at 376 Rand. My stop loss is 359. The risk per share, therefore, is 17 Rand per share. I'm going to risk a maximum 2% of our portfolio on this trade. Now, we've got around about 300,000 Rand at our disposal at the moment. So 2% of that is 6,000 Rand. And what this means is that I'm willing to lose 6,000 Rand if I'm wrong and my stop loss gets hit here.
And this is pretty much the maximum that you take on trades?
It is, yeah. We never go more than 2% risk on any of our trades. So this is the maximum. I take that portfolio risk of 6,000 Rand and I divide it by the risk per share. And that gives me 353 shares. So I'm rounding it down to 350 CFDs. Now, my target is 420 Rand. That means the risk to reward ratio on this trade is 1 to 2.6. That risk reward ratio is a little low on the basis that our stop loss is quite loose. If I had have tightened the stop loss up, the risk to reward ratio would be slightly better, but I'm happy with that as it is. And then lastly, the exposure that we take. I know some viewers like to ask about what exposure do we have here. Well, 350 CFDs of Aspen is worth effectively an exposure of 131,600 Rand. So that's the exposure that we've taken to these shares.
Garth, are you in any way nervous that it hasn't taken, that it's taking a while seemingly for Aspen to bounce back strongly? Or do you think that's quite normal? Because last week, of course, you alluded to 2013 when there was a similar book build by GSK.
Yeah. Look, I think there's certainly still a little bit of an overhang of stock in the market. Remember that 11 billion Rands worth of shares were placed. So there's probably still likely to be a little bit of noise around these sort of levels. But by and large, I get the feeling that that stock is being mopped up by the market, and we should gradually see it tracking higher. I do like to see trades working off the bat almost immediately. But and to be fair, this one has. I mean, it got out the gates quite good. It's not rallying strongly yet, but I still think the setup looks good. And I think that the likelihood that we see it heading up to 400 and above that is still fairly strong. Okay.
I mentioned that you were on a roll at the beginning of the show, so let's have a look at how everything has stacked up over the quarter.
Yeah, well, I mean, we now, final day of the quarter, first quarter, and we are up almost 22% for the year to date. So it's a great, I think this is probably one of the best quarters we've ever had on Traders Corner. Yeah. I don't think we've had a losing trade yet.
Yes.
So, yeah, yet. You always say yet because it's waiting out there somewhere for me, I know. But anyway, I mean, those are the positions that are open or have been opened recently. So there's our Pioneer Foods and Zeder pair trade where we closed out a nice profit there. We've still got an option structure working in the background for us to June where we've paid 2,500 Rand in premium there. And then this Aspen trade currently running a mark-to-market profit of almost 1,500 Rand for us.
So looking fantastic. Let's not put the hoodoo on it, shall we, Garth? But it'll be interesting to see what the next quarter holds. We'll leave it there. Thanks as always for joining us on the show. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.